Thank you for tuning in to another edition of the pre-market pulse scan. This pre-market pulse scan report is for trading on Tuesday, December the 12th, 2017. Well, we had the launch of Bitcoin futures Sunday night, and you can see here the current bar. This is the weekly bar, daily bars down here, intraday 4-hour, intraday 1-hour chart. And it's brand new. So as you can see, so far it's up from where it started, where it opened at. The only problem, though, is that because of all the controversy surrounding it, not everybody is offering it. Not all the brokers are offering it. TD Ameritrade is not offering it. Even though you can pull it up and monitor it and watch it, it's not available for trading. Interactive Brokers does have it available for trading, but you got to sign additional disclosure agreement documents. Also, if you are unaware of it, it is becoming increasingly difficult for American citizens to have access to a wide variety of derivative products. And when they are given access to them, they're giving what is called limited access. So it's becoming increasingly difficult to short Bitcoin. I know Kraken was one exchange that allowed you to do it, but then they since stopped it, and it's kind of a day-by-day thing now, but that's about it. The U.S. citizen is extremely limited when it comes to derivative products. If you're located outside the U.S., chances are you can trade pretty much anything, any CMD across the board, okay? Which is great. CMDs are great because they give you access to commodity products as well. And for the most part, you can trade all that stuff in one account. Most Forex accounts for overseas clients allow you to trade those. Here in the US, we just can't. It's not available. So everyone's watching this Bitcoin futures to see, what kind of volume and all that stuff you get out of it. As you can see here right now, the volume is only 347. And yesterday at the launch, I think we had, yeah, it says 347. I think it was like 3,800 contracts or something like that. So it's a small thing. There was a humongous debate on the business channels yesterday about it. They had a debate on CNBC, which is a pretty good one, and they've been having debates on Bloomberg since like Friday. I must say too that I have been very impressed with Bloomberg as of late. Now, CNBC used to be the rock star back in the day in the 90s, but they've since fallen off, man. They've fallen off a lot. Their content is just totally different. I think ever since they started playing hip hop music during the commercial breaks and stuff, that they just I don't even know what term to put on it. But Bloomberg has been on point, man. I like the Bloomberg because it goes to different time zones. Once the U.S. session's done, they switch right over to the Asian session and the Middle East sessions, and they go all around the world. And you get to see what's happening in other parts of the planet, and you get to see what they're talking about, the things that we don't talk about here. It's been on point. And like I said before in other videos, Bloomberg was the only business channel that you could actually watch at different points and actually make money off of what they were saying at the moment that they said it. I can't say that for any other business channel ever. It's always been the opposite. You do the opposite of what they talk about, what they're saying, and you make a boatload of money. Not with the Bloomberg. The Bloomberg has had moments where they have literally been on point, and you could go in there and do what you needed to do. And I think that has to do with the point that, the Bloomberg terminal is where all the, institutional clients have access to. You can have access to it too. It's absorbently expensive, but you can definitely have access to it if that's what you need. So anyway, just wanted to point that out. Bloomberg, I've been impressed lately is their coverage, how they've been covering certain things. Even during the so-called terrorist attack yesterday with the explosion in New York City, Bloomberg was all over it, while CNBC was interviewing some congressmen on the steps of the Capitol, or wherever they were in D.C. So I wanted to point that out too. Very interesting. All right. So as you can see, the Bitcoin is down over 800 points right now, which you would expect the volatility. One of the arguments about the Bitcoin futures too is that they were like, well, this is very, uh, this is terrible for a launch of a futures product like this. Look at the volume; it's ridiculous. Nobody's interested. No one's trading it. Blah blah blah. Well, what are you comparing it to, though? Is the question. No one trades butter, milk, or cheese, but those contracts still exist. Even though most brokers will not give you access to those markets because they are super thin, they still exist. Pork belly still trades too, but you don't have access to it anymore. You used to, but not anymore. So there are commodity products that are available to you to trade, but you do not have access. Just remember that. Just like the weather futures. Most brokers do not give you access to those weather futures, but they still trade and they exist. And yes, in comparison to the E-mini S&P 500, they are extremely thinly traded. So using thinly traded as an argument does not really stand. There are stocks that are thinly traded, but they are still available to trade. Liquidity is not really an issue when determining to launch the products. There are other factors that come into play. At the end of the day, just so you know, when it comes to derivative contracts, if the price doesn't fluctuate or move, then that thing is done away with. Just remember that. Anything that don't move, they do away with it. Stocks are the same way. If a stock doesn't act right, doesn't move right, don't price right, at the major exchanges like the New York Stock Exchange, the NASDAQ, it gets delisted and put down to the pink sheets, gets banned to the over-the-counter market. All right, if it drops below $1 and stays there for a certain amount of time. So it's the same thing, but with the futures, it's a different ballgame. So anyway, it's being launched. The CBOE launched it, and the Mercantile Exchange should be online in January with their product. Now, I think the Chicago Mercantile Exchange is going to be way more liquid because that's where your E-mini S&P 500 is traded out of. So, yeah, I think that going forward, this whole Bitcoin thing is going to be amazing. It's going to be used as a proxy for all the other cryptos, and for the most part, the crypto space follows the Bitcoin. The Bitcoin is like the DAO of your crypto space, and you do have your top, your top 10 and your top 20 products that I do believe they're going to come and they're going to probably make a futures contract for them too. Because you got your Bitcoin, okay, that's a done deal. The next one they'll probably do would be Ethereum, all right, because that is a separate animal and has a whole mammoth of application possibilities with it. So that may be the next one you see. Litecoin is another big one. We'll have to look and see. Like I said, there's so many possibilities. I would not be surprised to see at least, 3 to 5 contracts based on the crypto space. Bitcoin just being the primary one. That'll be the DAO. Your Ethereum will be, I guess, your NASDAQ. And then there'll have to be a third one. So who knows? The way Reggie Middleton's been doing what he's doing, I wouldn't be surprised if Veritasium made the list and they made a Veritasium futures contract because of its application capabilities. So we'll see. It's just so many ways this thing could go. But this is an exciting new paradigm shift. It's not going away now that they've made a futures contract for it. This is a done deal, folks. This is the future. So you got a lot of people that are fighting it, just like a lot of people fought before with prior innovations. There were people that fought the indexes. They didn't want to see stock indexes tradable in ETF form or futures form. Remember, those products didn't come online until like 1997, 1998-ish. All right, most of the ETFs that you see, like the QQQ, the SPY, all of the spiders, all this stuff. This stuff is brand new. Didn't come into being until like 1997. Prior to that, it was you couldn't do that. All right, if you wanted to index yourself, you had to trade, the top 5 securities within a sector, and that's how you would diversify yourself. So we're now entering into a new phase of everything. So this is coming. I told you that it was coming. I told you guys this over a year ago that this was coming. All right. They're putting it out there for you so that it's not a debate anymore. It's not a conspiracy theory. It is a conspiracy fact. We now have Bitcoin futures. All right. Cryptocurrencies is the future. It is the money of the future. All right. And it just lets you know where we are in the end times and how fast we're getting there. All right. So with that being said, like I said, the markets overall are in a general holding pattern within a large price inflection point across the board. And we're probably going to be quiet like this leading until the end of the year. Now, I gave you some more predictions. I'll bring it back up just to remind you folks. On the equity side of the blockchain space, I do believe that the blockchain stocks, that 2018 is going to be the year of the stocks. This year you had your cryptocurrencies leading the way. But I think in 2018, those blockchain stocks now are going to start to move significantly higher. BTCS is going to be a primary focus. I do believe that the BTCS could be worth several dollars in 2018. I wouldn't be surprised to see it get up to at least 30 bucks. All right, so you may want to get yourself a few shares of that just to have in your back pocket. And this is not an offer to buy or sell securities. As I do in my videos, I'm just pointing out some analysis and things that you may want to take a look at. Another funny thing, too, that has come to pass, as I told you it would, everybody is a guru now. Everybody's a trader. I remember being back on the show with the late, great Charlie McGrath several years ago when we had this discussion, and everyone was saying, why would you want to trade? Trading is speculative, it's gambling, blah, 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 blah. Now, everybody and their grandmother is a trader because we're in a new paradigm where cryptocurrencies are the wave of the future. They're on fire. You're in a parabolic stage 3 bull market, so everybody's an expert. Let me warn you about stage 3 parabolic bull markets. At some point, they do calm down, and they go from parabolic stage 3 to a normal standardized stage 3 bull market. After that long extension, the market corrects, and the bull market switches from bullish to neutral. All right, and that's a sell signal, and then from there it turns to a full-blown bear market. You do not suspend the laws of trading just because something is in a parabolic bullish state. The principles, the art and science of trading still apply. It doesn't matter what the mania of the day is. If you do not understand trading fundamentals, at some point you will get smoked. You will find yourself giving up all of the profits that you've made and then some, because the chemistry, the art and the science, the mental makeup of the human being psychology comes into play. You cannot resist it. You cannot ignore it. You have to deal with it. And because human beings are involved and human beings have emotions, those are going to play out at some point, and you will get smoked if you are unaware of this. Time and time I've seen it where people make millions and lose it all because of the psychology of trading that they know not of. What you do not know can destroy you. Ignorance is not bliss. There are no shortcuts to this, folks. I've been encouraging people to learn about becoming traders for some time, for years on YouTube now. You cannot take shortcuts in the educational process of learning how to trade the markets. Not to mention, you're going up against artificial intelligence software programs from across the globe. How can you compete with such technology if you don't understand the markets? Do yourself a favor, take this time to educate yourself so you can learn how to trade correctly. There are YouTube channels that have come up overnight. Everybody's claiming to be a guru because they were fortunate enough to be in the right place at the right time, had some cryptos, they've blown up, and now they've become rich, and now they're a guru. You're not a guru. All right? Where were you in 2011 when the Bitcoin debuted itself and was trading at 11 cents? Where were you? They were nowhere to be found. Where were you when the NASDAQ bubble exploded in 2000? Where were you? Where were you when the financial crisis of 2008 actually kicked off in 2007? Where were you? All I gotta say is pulsewavetrading.com. Come learn how to trade the markets correctly. 7-day free trial being offered to all Rogue Money listeners. Take advantage of this generosity while it is still available. 7-day free trial gets you access to everything: the study course, the private coaching with yours truly, access to the premium trading room where you will be with traders from all across the globe. We trade everything here. We trade every market on every exchange across the globe. You live in Asia, you want to trade Asian equities, I got your back. You live in the Netherlands, you want to trade what's available on your exchange there, I got your back. You live in Germany, I got your back. Australia, I got your back. There's no other service on the planet that is able to do what I do at pulsewavetrading.com. I got your back. The most robust trading system ever to be revealed anywhere. Trading all markets, stocks, forex, and commodity futures products, including cryptocurrencies. That's right. Learn to trade the pulse waves. The pulse waves take what all the algorithm platforms are doing across the planet and puts it right on your computer screen. So you will know where all the price inflection points are days, sometimes weeks in advance. Pulsewavetrading.com for you. Prove it to yourself. Come see what the noise is all about. I dare you. And with that being said, this was just the introduction. Fasten your seatbelts. We're going to look at some charts. Starting off with gold. Gold and silver has been the whipping boy of the central banks for an extended period of time. They will not let the boot off of the neck of these products. There's many reasons for that. But since the cryptos have taken into account, no one wants to talk about the gold and the silver. As a matter of fact, people have been dumping their gold and silver to put the money in the cryptos. But what you should be doing is, if you're going to pull money from your gold and silver to put toward the cryptos, that's smart. But just remember, with the profits you make from the cryptos, you need to get some more physicals. There's coming a time in the day that this here is going to cease. This downtrend is going to cease. And at some point, gold is going to catch a monster bid along with silver. Until that day comes, though, you got to trade what you see. Market has been losing momentum. This is the second week in a row. We traded below that price inflection point, and we've opened up the door to more downside, just as I told you was going to happen. So right now, the market's bearish, and it's threatening to lock in, fall below the Kumo cloud, and drift lower. In order to put a stop to this, gold needs to close above 1267.40 this week. It's going to be a hard fight. Looking at silver. Silver here is the same thing, but it is pulling apart a lot faster. And it's threatening to lock in as well. In order to put a stop to this, it needs to close above $16.36 this week. And that is going to be a hard-fought battle as well. I think the $14 handle is looking us right in the face, maybe as early as next week in silver. Speaking of the mighty NASDAQ, the mighty NASDAQ is still mighty, trading above the price inflection point. A close this week below 63.29 would tell you that the end is nigh, at least temporarily, and then it would open up the door to the 61.35 handle, which is where your price momentum inflection point resides. Taking a look at the crude oil, oil has been trying to get up to that $60 handle. All right, as long as it closes above $56.95 this week, it opens up the door to do that in the coming week. Taking a look at strong bonds, there's still been talk about the interest rate situation with the Fed meetings this week and all that good stuff. And right now the door is wide open for them to raise those rates without it being too catastrophic to the markets. As long as you're below the 154 handle, the door is wide open. And right now your complexion is a elongated, consolidated bear market. All right, you're in the Kumo cloud, but your trend lines are still down. So sideways to slightly lower prices right now. Everything's in the Fed's favor as far as raising those rates. The fact that they still haven't done it yet is letting you know that the economy, the markets are not as stable and healthy as they would lead you to believe. We're at 152.30. That's a far cry from the 154 and the 155 handle. But as long as the prices remain below the trend lines like they are, the door is wide open for the Fed to do what they need to do without it reverberating to catastrophically throughout the markets. Looking at GDXJ, what can I say? GDXJ looking like silver for the most part, isn't it? It needs to close above 31.36 to put an end to this bearish move. Hack above 30, still way above 30, folks. I think it's going to stay this way at least to the end of the year until the holiday season is over. This right here, as long as this is up, it's funny because hack is also now being used as a proxy for other things, not just cyber threats. But as long as this hack stays above 30, what you saw happen in New York with the explosion, I think that is just the beginning. I think it opens the door to all types of terrorist activities, not just limited to cyber. All right, this is like the Tao of Illuminati, conspiratorial false flags and things of that nature. As long as hack is above 30, you will hear and see a lot of terroristic things. All right, and hack things. All right, it's just the way that this thing has been working. When it's elevated like this, things happen. When it's below 30, if you notice, the world is quiet. So the powers that be are taking their signals from this hack. I exposed this some time ago, and it has rung true ever since the inception of my, that's what I'm looking for. Still early, I haven't drank all my coffee yet. Disclosure, if you will. There you go, disclosure. All right, XIV. XIV right now is breaking away from the price inflection point. As long as it closes above 117.54 this week, the rally rocks on. NVIDIA, pretty much the opposite story. You're remaining below the trend lines as far as the price inflection points go, and it needs a close above 198.33 to put it into the corrective mode. All right, it can bounce from here. If not, $150.95 is the next stop, which is this trend line here. It's the major trend line for the bullish run. It is in jeopardy and possibly in play if we lose another week of momentum. Keep your eyes open on NVIDIA. BTCS, I think, is going to be the talk of 2018. Rampage is coming in February. That could catapult us back up to that 60-cent handle, man. Break 60 cents. This is going to be a fun one to watch. All right, that's pretty much all I got for right now. Not a whole lot to talk about per se, so I don't believe in making things up. All right, so with that being said, you got your marching orders. Watch those price inflection points. And do yourself a favor, if you have not already done so, come and subscribe to pulsewavetrading.com and learn how to trade these markets. Learn how to make money from jump. And with that being said, remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. Peace.